What's happening, guys? Dustin Owen here. I am back with another Talk Mortgage to Me, and I am with, yet again, my friend, Jason Purcell, Certified Mortgage Planners, one of the best mortgage brokers I know. He runs his own mortgage brokerage out of Lake Mary, Florida. Jason, you have another scenario you want to share with us where the audience can listen to how you found a way to yes and find ways to be encouraged that home loan financing is available, especially if they're working with the right lender. Walk us through your most recent scenario.
Yeah, we got a call actually this summer. I was at my daughter's volleyball at the Orange County Convention Center, and it was a May Day. It was supposed to close on Friday. Actually, that was the day that I was receiving this phone call, for example. I stepped out, took a little bit of information, but I had a self-employed borrower. They had 3 businesses, they had 3 investment properties, they had their current primary residence, and then they were buying my agent's listing. And so they came with the financing, so I didn't get the opportunity for that one. And they were working with a loan officer that they've closed 3 transactions with already. And then as he's talking through, I said, you just can't do you can't do what you're trying to do based on the loan officer's advice. And so a lot of times when tax returns aren't going to work, we look at bank statements. And so typically we can help them qualify with 12 or 24 months of their business banking deposits. And that is a way, if they don't have the taxable value, to get more income for qualifying purposes.
Yeah, so the way that I heard and understood this story, and by the way, you said Mayday. Okay, Mayday, 911, fire, hot potato, emergency, like something went sideways because this particular buyer was already working with a lender that they had experience with. Like they had done 3 transactions with. They had no reason not to trust this guy or this girl, and I'm sure that lender is a great lender. However, sometimes things don't go the way you expect them. Yeah. So you're at your daughter's volleyball tournament and you get that phone call, and the phone call isn't from the buyer, right? The phone call is from the person representing the seller. Because what does the seller want? They want to sell their house, get their money, and a lot of times they're buying another property. Yes. And if their home doesn't sell, it impacts them being able to buy their next property, or maybe they're just trying to go away on a European cruise for 45 days, and this is the money that they're planning on using because maybe the dude just retired. Whatever the case may be, it's never good when a seller can't get their money. Yeah. And it's Friday night, you pick up the phone call, and your realtor's like, Jason, I need your help. And you get on the phone, and by the way, y'all, as lenders, just so you know, when we hear self-employed, we take a deep breath, we take a step back, and we pause. Because a lot of times with our self-employed clients, they're able to take advantage of every tax code out there, and the taxable income doesn't represent the revenue that they're generating and the money that's going into their bank account. So when that happens, we historically turn to a bank statement loan. I think that's what you were saying. Yes. And your go-to, and maybe that other loan officer's go-to, was, hey, let's look at a bank statement loan. The problem is you couldn't do a bank statement loan. You're going to talk to us about why you couldn't do a bank statement loan, but real quick, for those that don't know, a bank statement loan is essentially when a lender looks at 12 months of your business bank statements, and they look at all of the deposits coming in over those 12 months, and based on those deposits, they're able to come up with and formulate a qualifying income. And more times than not, that qualifying income is much higher than what you're showing on your actual personal tax return. Yep. But you couldn't go bank statement loan because what happened?
And this would have been a slam dunk if we could have used business bank statements. But unfortunately, the business partner was basically commingling personal funds into this account. And there were 9 NSFs the previous month to me getting this loan introduced to me.
Yeah, so in general, when you're doing a bank statement loan, that bank statement is a business bank statement, and all of the transactions, the debits, the credits, the comings and goings, need to be for business purposes. Yes. The minute a mortgage underwriter starts seeing that you're using your business banking for personal use, like, you know, you're paying your mortgage with it, or you're paying your kids' tuition with it, then all of a sudden it's deemed co-mingled assets. And for many lenders, that negates that account from being able to be used, right? And then on top of it, an NSF, non-sufficient funds, is terrible. Like back in the day, it would have been like bouncing a check. You're trying to take out money that's not there. So although typically it would have been a slam dunk, to be able to say, you know what, ma'am or sir, you don't qualify for conventional financing because you had the 3 rental properties and maybe they're showing a loss on paper. And you had the 3 businesses and maybe they're not showing sufficient income on paper, but you have enough money coming into your business we can formulate income based on those deposits, except, wait a minute, there's a business partner, and the business partner is commingling them with his personal debits, and by the way, he's over withdrawing, right? It's like, we can't do this. But what loan did you do?
We ended up switching it to a profit and loss loan, also called a P&L loan, and that's where we can take the P&L, we can take the P, the profit, and that's what we can use in lieu of bank statements or in lieu of tax returns, for example. And that was tough, but we weren't asking the CPA to do anything that they hadn't already done because they had the 2024 draft prepared. They just weren't filing the 2024 on the business because of what was going on. And so we were able to do the profit and loss. The CPA was reluctant to sign, and this is not an audited financial. I said, put on there, this is not an audited financial, and you're just signing what was given to you. And again, it matched the tax returns that will be filed, and we were able to get that done. But again, the CPA initially was reluctant to do that because of their code. And again, that is just another solution that we have. And so if tax returns don't work, we immediately look at bank statements. And if bank statements don't work, then we're going to look at a profit and loss.
So what I'm hearing is when there's a will, there's a way. In this scenario, the loan was funding in 2025. You would have needed 2024 tax returns. However, the tax returns weren't filed yet. Probably the person had filed an extension. Mm-hmm. So in lieu of getting that 2024 tax return, you can get a profit and loss statement. But a lot of times, if you're a self-employed person, your CPA will tell you this, CPAs may feel a little bit uneasy having a profit and loss statement going to a lender, but as long as the CPA can write on that profit and loss statement that this is not an audited financial statement, it should give the CPA the peace of mind that they need, that these numbers haven't been audited, meaning the taxes haven't been finalized, but they are utilizing the information given to them by the business owner as it pertains to this is how much revenue we generated the previous year, these are what our expenses were, and there are specific loan programs out there called P&L loans or profit and loss loans where it's different than a bank statement, but it solves the same problem that a bank statement does, which is doing loans for self-employed people can be difficult because a lot of small business owners or self-employed people take full advantage of the U.S. tax code, which is great because they're not paying a lot of money in personal income taxes, but it's bad because they don't have a lot of taxable income to show to a lender to qualify for conventional financing or FHA financing or VA financing.
And the terms on these loans are very favorable because they are putting 20% or more down. And ironically, it looks like I may be doing another loan to buy that partner out.
What typically, and I'm not going to hold you to it because mortgage guidelines change on the daily, but typically, what type of minimum FICO are you looking for and your minimum down payment are you looking for these types of P&L loans?
Yeah, typically you're going to be 680 plus credit score. A lot of times you're going to be 10% or 20% down, for example, and those rates technically are going to be in the upper sixes right now.
Okay, so like to give you all some perspective, as Jason and I record this, the average interest rate is sitting right around 6.3%. Yeah. So yes, this is alternative financing. Yes, it comes with more risk, but it's not a punitive hit because maybe you're looking at 6.8 versus 6.3, but you're not staring down the barrel of something that's 8.5% when the market's yielding 6.
That is correct.
Jason, if people want to get a hold of you, what's the best way to reach Jason Purcell if they have a scenario like this that they want you to help them with?
You can call me at 407-383-8884. You can email me at jason@cmpfl.com, or you can follow me at Jason R. Purcell on Instagram.
Y'all, if you like content like this, make sure you hit the subscribe button. Share this with anyone that you know that would benefit from content like this coming on our channel. And if you or anyone you know is looking for a home buying consultation, potentially in a market that Jason isn't licensed to originate in, all you have to do is click the link down in the description, and that's how you access a member from our team that will dedicate 20 to 30 minutes to you to give you some direction on your home loan scenario.